Well, investors are looking to the tech sector for signs of life this morning here as tech stocks are extending some losses after the NASDAQ composite logged its worst day in the last 2 years. This week, chip stocks like NVIDIA, TSMC, and ASML were hammered amid a rotation from tech leaders into less prominent parts of the market. So, with a bit of a sell-off on the top of minds of investors, how should you play into the sector? Here with me now, we've got Tony Zipparro, who is the EquitySet CEO. Great to have you here in studio back with us.
Thank you for having me.
Absolutely. All right, so let's dive into this. I mean, what do you make of some of the rotation or profit-taking that we're seeing this week? Is it just trimming of positions and reallocating elsewhere? And if so, where?
I think what you're seeing with the volatility, right, the semis and what's been working going down, I think it's been long overdue. As we know, momentum kind of leads the market. And so really the narrative should be where you think we are in the economy. I think we might be closer to an early to late stage peak, right? Not necessarily going into a huge contraction, but with a little bit of slowdown, if you are of the same mind, that's where then you definitely trim down on some of the more discretionary, capital intensive industries and technologies such as the semis, right? The ones that have really gone up leaps and bounds, and you get a little bit more defensive in terms of technology industries to play.
And thinking through where we are in the economy and using that as perhaps the North Star or one of the guiding principles here, then you'd also have to think about what areas of the market are most impacted or most sensitive to the rate environment. What are those for you?
Absolutely, and that's capital intensive industries, right, where you've got not the greatest, where they're trying to get to profitability, right? You've got a lot of debt on the books. You really have to be cautious. Not saying that they can't continue to grow, right? Because the kind of antithesis of that is we're in the middle of a multi-year expansion boom, and we're just taking a little pause here. But you're exactly right in you want to look for stickiness. Enterprise spending, I mean, not maybe on a day like today for something like CrowdStrike, but cybersecurity, right, is another one. So healthcare tech, information tech, and getting back to software application infrastructure, the things that will be stickier or money will continue to be put into an infrastructure or healthcare.
We haven't gotten into the teeth of big tech earnings yet, but as we're really anticipating the next few weeks and the results that are going to be coming out, what do you believe is going to be the barometer for this earnings season?
I think it's going to be how good the growth outlook is. And if it falls, and I can't put my finger on exactly what that expectation is, but even if it's growth, but it's weaker than expected guidance, I don't think it's going to land well. And so that's where those big tech earnings could continue to perform well, right? So you've got Microsoft, you've got Adobe, you've got, again, those players that could be more defensive, but because they've been pumped up so much in terms of price, that's where I'm a little wary until that clarity comes. And so I think it's going to be, and if all of a sudden the guidance is bad, right, it signals a decline, I think there's going to be a lot of blood in the streets in those names.